Okay, it's Mike Swanson again. This is part 4 in my series about this bear market, how to survive in it and actually profit from it if you dare to. Watch the previous 3 and there'll be one after this. Now what I want to talk about in this one is the psychology behind a bear market, how most people act in a bear market so you won't do it. You won't fall into the trap that 95% of everybody does when bear markets happen. Most people simply hold on until the very end and they sell out, and the next thing you know it's a true bull market around the corner and they can't participate in it because they got shook up from the bear market. Well, people say that markets are driven by fear and greed, but when it comes to a bear market, it's pure fear. Now when I say that, most people think, oh yeah, fear, because stocks are dropping, and then a lot of times you have these panic washouts. Everyone on TV gets scared for a couple of days and the market bottoms, and then you get a rally. That's what we saw in January, it's what we saw in March, it's what we saw in August, and before this is over we're probably going to see it 2 or 3 more times, and one of these times will actually be the final bottom. So there are periods where you see that kind of fear that does cause people to sell in a panic. But when I say fear, I want you to think about something else, and this is really what fuels the bear market and keeps it going for a long time. And that's a different type of fear. It's not fear that causes you to sell, but it's fear that causes people to hold on or to actually add on in desperation that they need to make up for losses. And that fear is missing out on the next bull market. People are fearful to sell because they're afraid if they sell, things are going to go up without them. They're going to miss out. Institutional investors, mutual fund managers, hedge fund managers are really fear-based driven during bear markets. That's why they ride the bear market rallies, because they're afraid that if they don't get on a bear market rally and that rally actually turns out to be the first leg in a bull market and they're not in it, their clients are going to get very angry at them and then probably take their money out or whatever. It's the same thing with stockbrokers, anyone that's managing other people's money. They're fearful of missing out, and that's the fear that really drives the bear market. It causes everyone to stay in it because even if they're losing money, they're more scared of missing out. They're scared that people are scared to sell. That's what it comes down to. They're scared to sell, and that's the fear. The fear is if I sell, the market's going to go up without me, and I'll be sitting there like a dummy while my neighbors make money. My competitors, other hedge funds, other money managers are making money, and I'm the only one left behind. People don't want to be left behind. They'd much rather, from the professional investor standpoint, it's more dangerous to be left behind in a bull market than it is to sell and have the market go up without you. That's why 90% of newsletter guys are going to stay bullish throughout this bear market. And 90% of the commentary on TV is going to stay bullish throughout this bear market, and while everyone became a believer in this last rally, because no one wants to be the guy that's wrong, the one guy in the crowd that says no, this is a bear market, get out, and be wrong. They don't want to. They don't want to be wrong. So that's what drives a bear market. It's this fear of missing out and not participating in gains. And that's silly. Logically, the most dangerous thing in the stock market is losing money. It's not missing out. But people really don't think of it in that manner. And you're going to see this throughout the entire year. Now, what ends up happening is that these are the subconscious fears that are driving the behavior of market participants. No one's going to say this on TV that I'm scared I'm going to miss out, so I'm holding, or I'm scared the market's going to start a bull market, so I'm buying, or I'm holding. I refuse to sell on this rally up to the 200-day moving average, in which in all bear markets before the market tops out and falls. But no, I'm scared. No one's going to say that because in their conscious mind, they don't even realize it because they're being driven, somewhere deep in their subconscious or whatever this. I can't remember the medical term, but that part of your brain that does regulates your heart and all this other stuff that you don't think about, whatever you call it. that's driving these behaviors deep down. That's where the fear is coming from, the defense mechanism. And consciously, they don't even realize what they're doing. So what happens in their conscious brain is they rationalize their inaction. They rationalize they're not selling, or they rationalize they're doubling down to try to make up for losses and participate in some rally that's going to bring them back whole. They rationalize it by saying this rally is the start of a bear market. The start of a bull market. Or they rationalize it by saying the Dow's 400 points off the high. This must be the bottom, so I'm going to hold on. And the market becomes an echo chamber where everyone on television is thinking like this and saying this. So it makes it even harder for someone to try to separate themselves, because everyone's saying this. Who wants to be the 10% or 1%, the one guy out of 100 that's not doing what everyone on television is? I can feel the fears myself. I told you in the first part that I was short, and I'm sitting here relaxed, enjoying the gains. I got on that short position, feeling good, thinking those gains are going to grow. But when I entered those positions, I was willing to ride them out for slight loss for a couple days. But that didn't make me nervous, because I didn't really have a gigantic position that's going to make me broke. And every time I've suffered some sort of setback in the stock market, and everyone does at some point or another, it's always been temporary. So there's no reason for me to fear having a losing position. I've dealt with that and whatever. But I looked at myself and I realized for a couple of days I was starting to feel stressed a little bit about the stock market because I was short. Not only that, but I was telling everyone else, hey, I'm short, I think this is a bear market, blah, blah, blah. And the market hadn't started to fall yet. And I was scared subconsciously, I know, that, hey, if the market goes up into a bull market, like everyone on TV says it is, I'm going to look like a dummy, because I'm going to be the one guy out of 100, when you survey the financial world, that's bearish. There are people bearish. I know lots of them. I talk to them. There's, whatever. But as a whole, most people are bullish, and they were really bullish when the market was at the 200-day moving average. That weekend before the market broke, I watched a Bulls and Bears show on Fox Business News, and this guy said nothing can stop the stock market. It's unstoppable. It's going to make new highs. Abby Joseph Cohen of Goldman Sachs, their house expert, the woman that they tried on TV, was saying that the economy bottomed right then, and the stock market's going to go up through the rest of the year, and it's going to be a second half economic boom. Over and over again, bullish opinions everywhere. And here I am sitting out in the wilderness saying, hey, this is a bear market. And not only that, but I'm short. And I think you should short too. Imagine the market went up. I knew, I look like a dummy. People aren't going to like what I say. They're going to be mad if they lose money. They'll blame it on me. I don't really believe I'm that responsible. Everyone makes their own decisions, but still, in the back of my mind, that was causing me some little bit of stress. And even then, logically, I had, my logical mind convinced, and I told you the reasons why, that I think are true logical reasons that this is a bear market, so I believed it. But still, what that makes me want to say is that if I can feel that kind of fear, I can imagine the subconscious fears that are driving the people who are bullish and the rationalizations they are using to justify their actions to deal or try to counter their subconscious psychological fears in this market. So what you have to do is not be fear-based, not try to move on your emotions, but to use real logic to understand what indicators you can use to measure market trends, to understand the fundamentals that are driving these market trends so that you'll be able to believe in what the indicators are telling you and simply stick to your guns. And you're going to be one of those people that are going to survive in these bear markets, And if you want to take some chances and some risks, you can make some money in it. Bottom line is you're going to come out of it unscathed. And when the next bull market is actually here for real, you're going to be making some serious money in it. And that's what I want you to be a part of. And we'll be talking about that probably in a year from now. But for now, this is bear market time, and we're going to adjust to that kind of environment.